Hello, once again, John Flynn here from Flynn Real Estate, serving Southern Ontario, based out of the Niagara region. Here, once again, to give you my honest and professional opinion regarding the 2023 Canadian housing market. So lately, I've been getting the impression from a lot of people that, there's this kind of narrative out there that, the worst is over or the worst is behind us. Now is a great buying opportunity. Prices are up, sales are up. It's a new year. Things are great, right? So I just kind of wanted to put some data behind these statements to see, okay, do they hold water or what's going on? Of course, historically in January, sales usually do pick up and prices usually do go up. But again, we're going to look at some data regarding that situation to see how 2023 stacks up. Before we get into the data, just a couple of news headlines from the last week or so. From the Financial Post, Canada's home prices are only halfway to the bottom, warn these economists. In the worst case, prices could plunge back to 2014 levels, says Oxford economist, and that was from February 6th. Wow, can you imagine 2014 price points? It's pretty hard to believe, but the link's in the description so you can read the whole article. From Bloomberg, Toronto's housing market enters deep freeze with sales down. Benchmark prices fell 0.2% in January from a month earlier. Available homes for sale more than doubled from a year ago. So yeah, when you look at actually average price points, I think they've dropped even further, but we'll have that data now in a minute. From the Vancouver Sun, BC housing sales prices expected to decline in 2023 from the BC Real Estate Association forecast. But any dip in prices won't last long, with a strong rebound predicted for 2024. Okay, let's get right into this data, starting with Vancouver. So, of course, sales are down significantly from a year earlier, from the January 2022, down more than 55%. That's a pretty significant drop. And looking at the average price points on Detached, 3.7% month over month from December to January. That's $73,000 in 1 month. 16.2% from January last year, $368,000, and 17.3% from the April peak, or $400,000. So it looks like Vancouver, Greater Vancouver area, will be entering the 20% club very shortly. I don't know if it's going to take a couple of months, but it looks like they're headed there. Attached properties, they're actually up 5.8% month over month, $68,000, down 1.7% from last January, 21 grand, and down 5% from the February peak, or 64,000. And the apartments are down 1.3% month over month, down 5.7% from last January, and down 10.4% from the peak in February. So yeah, it doesn't look like Vancouver's had a very good month in January, but let's move on to Calgary. From the Calgary Real Estate Board, supply of lower priced homes remains low for January. The level of new listings in January fell to the lowest levels seen since the late 90s. So of course, Calgary is still struggling with that inventory issue. Let's see how the sales look. So as you can see, the January sales, not much higher than December, but the inventory is a little bit higher. So inventory is starting to pick up there, which is expected in the new year. And months of inventory is starting to pick up too in January. Again, historically, things pick up in January into the spring, so you're going to see inventory increase. And they did have a good January, which again is expected. January is a good month, plus 2.6% month over month from December to January, $13,000. Had a less than 1% decrease year over year from January to January 2022, and 7.2% decline from the February peak, or $39,000. Now on to Winnipeg. Winnipeg, they're always late releasing their stats. So these stats are for December, but I wanted to touch on it because I haven't touched on it in a while because they're always late. But anyway, let's check it out. Slowing 2022 MLS sales that began in the summer continued through December, transitioning the Winnipeg Regional Real Estate Board market region back to a balanced market. So if you remember, they were kind of still on the seller's side of the market. Now it's a balanced, and of course, we probably know where it's going after this. And here is a chart for the sales trends in Winnipeg. Of course, they've declined throughout from June to December, and we'll see how that goes going forward. So for Detached in Winnipeg, they had 0% month over month movement, and they're down 16.7% from May. Looks like they're heading towards that 20% decline minimum, just like most of the country is or is heading in that direction also. Attached properties down less than 1% month over month and down 15.4% from April. And the condos have taken the biggest hit in the month to month with 9% in 1 month. That's a pretty big drop, and 12.6% from June. So anyway, we look at Toronto, and of course, from the article in the beginning, Toronto's not doing very well, but let's see how the data looks. Total transactions or sales down 44.6% from last January and down 1% from December. So for the average price, it's down 16.4% from last January, 1.2% from December, and 22.2% from February, their peak, or $295,000. So, of course, their declines are continuing. Doesn't look like things are improving in Toronto, as you may have heard from other sources. Total new listings, they're down 3.7% from last January, and the sales to new listings ratio is down 30% from last January. And of course, days on market has skyrocketed from last year as expected. I'm going to save the rest of Ontario until last because that's where I'm going to dive into the January trends, and there's a little more information. So let's move on to Quebec. Single family median prices for the province of Quebec, they're down 3.8% month over month and 16.9% from May. So we see this trend now where most of these other places in Canada that didn't reach the 20% declines, they're quickly headed there. Median condo prices for the province of Quebec down 1.4% month over month and 11.5% from their April peak. Montreal single family median prices down 2% month over month and 13.8% from April. Pretty significant monthly loss, 2%. It's not small by any means. And the condo prices in Montreal down 1.3% month over month and 9.8% from their June peak. And a quick look at the days on market in the whole province of Quebec. Of course, that is up higher, a lot higher than January last year. So again, would suggest the market is continuing to cool. Now on to Nova Scotia. Nova Scotia started the year well, just like a January should historically. They're up 4.1% month over month, but they're down 17.4% from their April peak. And again, approaching that 20% decline very quickly. And we've heard in Nova Scotia, inventory has been an issue also, just like Calgary, but their months of inventory is starting to increase. It looks like they're approaching 5 months of inventory. So months of inventory has really increased a lot in January for Nova Scotia. And the sales activity for January in Nova Scotia, well below the 10-year average. You have to go all the way back to 2016 to get the same level of sales or low level of sales. So it looks like the party is over in Nova Scotia. Okay, now on to ITSO, or the rest of Ontario, surrounding GTA, most areas, 20 boards included in this data. This is my area, so I have a lot more data. So we're going to analyze it a little bit further to see what kind of trends and kind of, make sense of this data as it comes to January data. So the average sale price has dropped 0.7% month over month. That's about $5,000, and 26.4% from the February peak, $260,000. So it looks like we're closing in on that 30% declines now for Ontario or surrounding GTA. But I want to look at the price changes or historical trends in January. So looking at this chart here, you can see we had that 0.7% decline. Usually January, you have increases. The last time we had a decline was in 2018. And going back to 2010, which is as far as these charts show, there was only 2 years that had declines in January. One was 2018. And of course, this year. Now, what did these 2 years have in common? Both years, they had rising interest rates. Now, in 2018, they only had 0.5% increase in interest rates from June to December, of course, before January. And then they went up 0.75% in 2018. But both of them had increasing interest rates, and they were the only 2 years in 13 years that we had declines in January. So usually January have pretty significant inclines. It's a new year. People are out there, prices are up, spring's approaching. So when you see a decline in January, it's a very strong signal of how the year will go. Here is the number of sales, very low. You'd actually have to go back to 2010. They still weren't that low, but 13-year low, at least if we had more data or consistent data from all the boards, we would probably go back further, but they are at an all-time low. And here's a bar graph of just January sales, and it shows the last 3 years. And of course, our sales are a lot lower than they have been throughout the last 3 years. So now on to homes for sale. This is all homes for sale. So you can see here, the homes for sale looks like it's about an average point right now. there's not oversupply, there's not undersupply. But when you look at the bar graph just for January, look at the difference between the last 2 years and this January. We're up like 305% from last year. And look at 2021 even. Like it's unbelievable how many homes are for sale now compared to the last 2 years. And here's the new listings. Again, trending up in January. We'll keep trending up into the spring most likely. And looking at just January for the last 3 years, of course, we do have a lot more new listings than we've had in the past 2 years. Moving on to months of supply, the chart here shows, again, just like homes for sale, we're at this average midpoint for the last 5 years or so. But when you look at just January for the last few years, you can see we're up to 2.3 months of supply, which doesn't seem a lot. But for January, it's a very good number. And the last time we had a higher months of supply in January, you'd have to go back to 2016. So again, it just shows you 2.3 months doesn't seem like a lot, but for January, it's a pretty decent amount of supply. Moving on to average days on market, you can see it's well above pre-pandemic levels at this point. And looking at just January, of course, well above the last 2 Januaries. And lastly, we're going to look at the average percent of last original list price. I know that's a mouthful, but because people relist and change their prices and whatnot so much, they have to come up with a kind of a fair statistic to report on. So of course, you can see it is starting to trend up from the bottom, still very low. If you compare it to the last 2 years, 106%, 115%, 95.5, and you'd have to go back to January of 2014 to reach a current similar level of 95.5%. So we're at a 9-year low for this statistic. So that was a lot of data this week. Thanks for sticking around. Leave your comments and questions below. I do read all of them. I try to respond to most, some more than others, depending on how good the debate gets. But until next week, I'll see you then.